Glad to have you join us again. It's now time for us to talk about trading activities at the Nigerian Exchange yesterday. Ambrose Omodion is with me in the studio, but before we get to him, let's tell you that on Thursday, the Nigerian equities market experienced a marginal increase of 0.05%. This upward movement in the market led to a positive year-to-date return of 30.9%. Additionally, the all-share index and equities capitalization both rebounded from their previous day's lows, climbing from 67,149 index point and 36.864 trillion naira to 67,133.19 index point and 36.82 trillion naira respectively. However, the market remained in positive territory primarily due to the increased value of banking stocks such as Zenith Bank, Access Holdings and First Bank Holdings, which saw their share prices rise by 1.27%, 0.32% and 0.62% respectively. Joining me now live, with me in the studio to do more analysis of these is Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited. Ambrose, good morning. It's a pleasure having you join me in the studio.
Thanks for having me again. Blessed.
Let's see what played out in the market yesterday. What are the fundamentals that fueled these figures that we are getting from the exchange?
You know, remember on Monday at the beginning of the week, I told you expect to see a mixed market. And I'll also be seeing that up and down movement to show you that investors are waiting for a positive catalyst to trigger either an uptrend or a pullback. And any of them is good for the investors. But when market pull back, you buy a cheaper price to expect the market will not remain in that state of it has to rebound. If you go up again, you are smart because you're already in the market. These are the people that anywhere you are, the market is going up. You don't need to panic or rather invest with information and also invest with enough research. But the good thing is that as we're coming closer to the earnings season, and also we need to also look forward to the macroeconomic data in terms of inflation figure for the month of September. These are shaping investors' decision. Why? Because if peradventure we have seen that our inflation has been in uptrend, and we have not seen anything that change that will tell us that it's going to slow down. Then for that, investors are probably factoring in that yes, if we are seeing a decline in Treasury bill, know that in Treasury bill is like a major instrument used for that money market tools, or we call it them instrument too. But at the same time, now that it's declining for two consecutive times, the previous offer and this last offer, it shows that inflation coming, it will throw a lot of this instrument in red position. Gradually, you can see that yesterday we saw more buying interest in the banking stock yesterday. Tells you that people already reading, where are we going? And also November is around the corner here. And we expect that the first MPC meeting with this new CBN government, they're not likely to adjust rate or to leave also a flat to watch because we have seen an assumption that this September the who was also a who. That's likely to happen again because why? If you look at what happened yesterday, if they are listing up 43 items, it tells you that they are reading something.
Because I was going to ask you, as the market reacting to that, if there's any fundamental change to read.
There will be. The market just opened this morning. We're just looking at if they are going that direction. So that they're also consulting to make sure that they manage this effort that have really put most of the industrial aspect of Nigeria in a very bad mess.
Corner,
in a bad mess. For that, I believe that we've been able to address this first issue. And if you look at our history for 40 years, our Naira has been devalued and coming down. But if they are coming with a kind of a mechanism that will to sustain this violation, and at the same time, FSB are valuable because the backlog we're having is huge, about $10 billion. If we're able to sort that one, clean that one off, and put that in the inflow, and also the operators in that industry also come in terms with that's why they are doing consultation to that this holding and all those stuff. Why they remove the 44? It was a sort of okay, let's lift it up. If there's because of the demand for it, let's see how it's going to be for the whole market. But I believe that before they do that, they will have push liquidity into the FX market before doing that. But now that will be another pressure. But I want to see how they're going to play. But as I said, for you to adjust any policy or pronounce, you need to do your own homework a lot because we know what happened when the governor, when the president, removed the subsidy overnight. What happened? And also, when the Naira was float, we saw what happened. I believe that preparation is very key. But I believe that investors are looking forward to what key major thing, inflation data and Q3 numbers that will shape the market. And also, like I told you earlier, that this last quarter is the most active quarter anywhere in the world. We expect to see, despite what is happening in Middle East, was activities improving this period.
Okay, so a lot of activities has been playing out in the NGX. We've seen that some institutional investors from the US actually played those to the Nigerian exchange. We're going to talk about that in-depthly during the analyst hangout. But what would you say is making these people, what are they actually seeing in the Nigerian capital market at this point in time?
No, actually, if you look at our Naira, it shows that our stocks is cheap.
Yes.
We've got an exchange rate today.
Okay.
I know that in the official market, we're around either 800 or 700 within that. But in the black market, above 1,000 Naira, I tell you, if you bring let's say $1 million to Nigeria market alone, $1 million, 4 people bring it in different, we're going to move the market because our value has dropped, and for that, it becomes cheaper for them. But another thing that they are not fools. They are watching your macroeconomic data.
Exactly.
They are not investors that you want to cajole. They just come to a show and look at it. You don't think that they are coming tomorrow morning. They want to see what is your plan and where we are going. Because if you want to benchmark or kind of assess any government or any company, as you are rolling out their plan, you not take their word to their plan. Are they playing the words with their plan, or they are really playing on that words? That's why we need a roadmap from the government and from the CBN. So that this foreign investor will not say, okay, for the last 3 months, we can see they are making progress because they implementing what they put on ground. This is what we need. That will, because I tell them, until give us a roadmap, we are just talking story.
All right. Ambrose, we need to go now. So much to talk about, and we need to let our viewers know that Analyst Hangout is back today.
Yes.
4:30 p.m. is the time. You can also inform your investors as well, so they can catch us with us. But finally, what's the market going to look like today as we wrap up for the week?
Because we saw an extension of the previous day gain. Today, because most of the banking stocks are cheap, and also some what we call consumer goods stock that are planning merger and acquisition.
Okay.
Those stocks moving up today might sustain the uptrend. But ideally, market is looking for next week where we're seeing the macroeconomic data and company performance. This is what will just shape the market. And also we expect the monetary policy and fiscal policy to give us a clue.
All right, we'll leave it at that. So much to talk about, but we should focus to Analyst Hangout. Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited, is with me here, and he has given us some in-depth analysis of what played out at the NGX yesterday and what we should expect from the market today. Ambrose, as always, thank you for your time.
Thanks for having me.
Okay, now, let's get talking now. But before then, let's tell you, coming up next on the show, as the efforts to improve Nigerians' non-oil export intensifies, the African Continental Free Trade Area, that's AfTA, has underscored the potential for an internal trade to exceed $70 billion, surpassing the level of development assistance. Also, the Nigerian fashion industry has been estimated to be worth over $2 billion and is expected to grow despite macroeconomic headwinds facing the country's operating environment, going by the rise in the number of fashion designers, models, fashion houses, and fashion events. And finally, crude oil prices in the international market were up today after the U.S. tightened its sanctions program against Russian crude exports, raising supply concerns in an already tight market, and global inventories are forecast to decline through the fourth quarter. We have details of this and more after this time out. Gladys, stay with us.